Let's look at the substantive procedures for each assertion when it comes to tangible non-current assets or fixed assets. So we shall start with the completeness assertion. What are the substantive procedures that can be performed to ensure that there is completeness? So remember, substantive procedures are designed to detect material misstatements. So the first one is obtain or prepare a schedule of tangible non-current assets showing the cost of the asset, accumulated depreciation, and then the carrying amount. And then you reconcile with the opening position to see if they match. So this can help to ensure that everything is recorded. Yeah. Prepare a schedule of tangible non-current assets that shows the cost, then the accumulated depreciation, and then the net book value. Yeah. Then another substantive procedure is you can compare the non-current assets that were recorded in the general ledger with the non-current assets register, and then obtain explanations for that difference. The non-current asset register, it's like a book that that registers the non-current assets. So you compare the assets that were recorded in the register with the assets that were recorded in the general ledger to see if they are matching, and if they're not matching, you obtain explanations for the differences between the two. Then another substantive procedure is physically inspect a sample of property, plant and equipment and trace each to the non-current asset register. So this is the main substantive procedure. Like in case you forget all the rest, make sure that you at least remember this one. You physically inspect a sample of PPE and then trace to the non-current asset register to see if they are matching. Then another substantive procedure is if a non-current asset register is not kept, then you'll have to obtain the non-current asset schedule that shows the original cost, the depreciation, and then the net book value. Then lastly is reconcile the schedule of non-current assets with the general ledger and then the statement of financial position to see if they are matching. So here are the main documents that we are dealing with. We have the asset register, then we have the non-current asset schedule, then we have the general ledger, and then the statement of financial position. So you just keep comparing those documents and then reconciling. So reconcile the schedule of non-current assets with a general ledger and then statement of financial position to see if figures are the same. And if they're not the same, you investigate the differences. Then another assertion is existency. So what are the substantive procedures that can be performed in this case? So to confirm existency of the tangible non-current assets, first is confirm that the company physically inspects the items in the non-current asset register each year. You can confirm this by asking management, or observing to see if the company physically inspects all the items that were recorded in the register to make sure that everything that is in the asset register actually exists in the company. Then secondly, inspect assets in the asset register, concentrating on high value items and then additions in that year. So look at the asset register and then look out for the assets that were acquired during the year and then confirm if they're actually there. Then high value items, confirm if they're actually there. So you can inspect the asset register to help you confirm existency. Then another one is confirm that items inspected exist Like if you inspect the items in the asset register, then confirm that they actually exist or they are in use, and then they're in good conditions, and then if they have the correct serial numbers. If they tell you that a car was bought, find out if that car is actually there, find out if it's being used, if it's in good condition, and all that. Then you can also review records of income yielding assets. Then lastly, reconcile opening and closing vehicles by numbers and then amounts. Like you see if the opening balance is the same as the closing balance, or you confirm if depreciation was actually charged, stuff like that. So you reconcile the opening and then the closing balances to see if they are reasonable. So those are some of the substantive procedures. What should be noted is that you are not supposed to cram these things like the way they are written here. You're just supposed to get an idea of how things are supposed to be stated.